Hi, my name is James Morrison, and I am going to be doing a presentation on a scenario in the book of Understanding Accounting Ethics, written by Mark Sheffers and Michael Pakalak. It's this book here, if you have an opportunity or a chance to read it. It is a good read, and it provides valuable information for those who are seeking a professional career in accounting. It gives you a good understanding of ethical situations that you might find yourself in and the different options you have and some possible solutions to choose that will be the best outcome for you. I also have an accompanying set of slides if you want to follow along on those slides while I'm doing this presentation. And what I'm going to present today is basically a scenario where there's a CPA named Susan York, and she has a really large audit she's doing for a company called Health Plus. And Health Plus is a mental health care provider for mentally ill patients, and Health Plus provides them with services to help them in their healthcare needs and growth. So Susan basically is faced with doing an audit that she is late on. The fiscal year end is June 30th, and she is given the financial statements and papers late. Normally she gets them by August 10th, and they're due by August 15th to the creditors, but this year she gets them on August 14th. And her friend, who is the CEO of the company, has been calling her and asking her to please, be patient with him and help him out and let him submit the work papers late, and still please, on their friendship, work and resolve them and get them done and get a review and audit done and be able to submit them to the creditors on time. So Susan is faced with a problem here. She is given the work papers late, the financial statements late. She has a real large time constraint. She's basically got one day to get it done, and she has already given herself to previous engagements on those days. She's got some family things that are important. She has some other jobs and stuff that she's involved in that she has to take care of. And we need to kind of look at and examine what options she has. So if we look at the different options presented in the book, it's in chapter 5. I think it starts on page 163. It presents us with 4 kind of different options and scenarios that she can go with. The first option is to basically just sign off on the work papers and trust her friend that he's done appropriate reviews, that he's done his financials correctly throughout the year, that he has done it according to professional accounting standards. The next option she has is to basically drop out of the audit, tell her client that she just can't do it in the time provided, and he's either going to have to find somebody else, or he's going to have to give her more time to get it completed and get it submitted to the creditors. The third option is she could call on some of her fellow audit partners to step into the engagement and work late and try to get everything done and accomplished in time, and see if they can't, basically get everything done and get a real good review of the case and present it fairly to those who are seeking for their advice. And the last option that we're presented with is that she could call the creditors and basically ask for an extension, try to figure out some way to extend the deadline and give her more time to do it. For us to look at all of those scenarios, we need to pick what the most ethical and appropriate decision would be. And looking at scenario 1, we can clearly see that it's not appropriate or professional or ethical for a person to sign off on work papers that they haven't done any of the reviews or testing on, to sign off on papers they haven't done any analyticals on, especially in that field where the client relies so heavily on Medicare reimbursements. A good thorough review and analytical procedures are very important, and compliance measures are also important to make sure they're in compliance with things that are required to get Medicare reimbursements. So that option is clearly a bad one. The next option of giving it to some of her partners to do, that was option 3, is also a poor decision, because a lot of auditors don't develop a good understanding of different clients unless they've worked on their cases for a while, and unless they have a really good understanding of that particular field of work, and also a good understanding of Medicare reimbursement procedures and compliances that clients need to follow, and her other partners may just not be qualified to do that. The fourth option of calling the creditors is also inappropriate, because it basically makes her go around her client, and her being an independent auditor, it's not her responsibility or duty to call the creditors and ask for an extension. It would be more appropriate for the client to call and contact the creditors and those that need the audited financial statements to ask them for an extension. So we can clearly see that all 3 of those decisions are bad and poor, and probably, a lot of them have a lot of unethical things involved in them. So clearly the last choice we're left with is that Susan needs to just contact her client and be open and upfront and kind and clear about it, but tell them that, we just don't have enough time to get this done and get it done right and do it appropriately. And ask her, you'll please let us know if you need us to do it, and please contact the creditors, and we will work on it, but it's going to be another 5 or 6 days or a week before it's even done. So this scenario has given us an opportunity to examine what's right and what's morally correct and what's ethical, and it's given us a good opportunity to examine the different situations there are and options we have to choose from. And I hope it's been a good presentation for you. I thank you for your time, and I hope you've enjoyed it, and I hope it's helped you make a good understanding in your life about ethics and a way to appropriately apply them to situations you might face. Thanks for your time. Again, my name is James Morrison.